Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The information shared here is for educational purposes only and is not a recommendation to trade.
Good morning, traders, and happy Friday. Thanks for joining me today, the 16th of January, 2026. This is episode number 2736. Is that right? So we're coming into a long weekend. The key theme today is, the risk off trade. So that's what we're going to talk about a little bit here. The U.S. markets are closed on Monday for Martin Luther King Day, and the Fed, the Department of Justice, constitutional crisis still unresolved. The weekend gap risk is really the highest we've seen in years, in my opinion. In today's Trader Bite, we'll talk about why smart money will probably bank, flatten our book, and run for safety. So this is what I'm looking for today. Let's dive right into this overall look at the relative range, relative volume. So far things are pretty calm. We're coming into this Friday completely calm. We don't have much on the calendar. We do have some Fed speakers, Fed's Collins, Bowman, and Jefferson this afternoon. And then we have industrial production out of the U.S. and AHB housing market index. So there's just not all that. There isn't all that much that's pushing us around. So if you look at the S&P, 74% of relative range, 92% of relative volume. The NASDAQ, and so on. The Russell, very quiet. So is the Dow. The DAX, Euro stocks, extremely quiet. We have some movement, however. If you move your eyes down to here, you've got silver, which was down over 5%. We got copper, which was down over 3% on decent volume. Gold is holding steady, just hanging for dear life to that $4,600 handle. And then crude oil today rolled to March from February. So crude oil, you should be trading the CLH6 contract. CLH6 contract, not the CLG6 contract. So CLH6, that's what we'll look at today. And that's about it. Really not much else to talk about. We're coming in nice and calm this morning, but I'm expecting the session I'm expecting us to balance out by the end of the session. Okay. So that's where we are. Let's take a look real quick at what we had. Oh, and by the way, it is Friday. And what I like to do on Fridays is to ask you, where are you from? Where are you currently located? Just punch in your city, state, if that exists, city, state, or province and country. If you see someone in the live chat who is nearby, would love for you to post your social handle. Don't post your email or phone number or anything like that. Post your social handle, and folks can reach out to you on that platform. You can do this also if you're watching the video after we are done. You can look at the comments and see who's around you. Love to get traders together. Traders really belong together. All right. So here's the recap. So this is kind of the freeze frame recap from Wednesday. And on Wednesday, we came in with the LIS above us. The LIS above us. Yep, go Bears. The LIS above us. And the primary scenario is that we are likely not to clear that 69.85 area if we even get into the LIS. And the idea is that we're very likely to roll over and start moving down to that perimeter zone from that session. So we're looking forward to push to 69.40. Here's what actually happened. Boop. So that's this day here. We were the LIS was in this zone. The LIS, let me change the color of my pen to yellow, my instructional color. The LIS was right in here that day. And let me draw that a little bit better. Boop, 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 LIS. Okay, so this was the LIS that was just in the video freeze frame. And the idea is that we are likely to have a lot of difficulty pushing up into that zone. And we are looking for the perimeter, right? So the perimeter, and we, boom, explode down to the downside. We've got the open at 72.25. We push to 69.79, which is right at the edge of this LIS zone, right there. Basically missed it by a tick. And then it drops into the perimeter, and then the perimeter starts to see some pretty decent support. We saw, they're off the screen now because I don't keep the bubbles for long, but we saw a lot of collisions coming into that perimeter zone, and it just stalled out. It happened to push through by quite a bit. The perimeter is really at 69.40, 69.36, and it pushed to 69.23. So push, this is quite a distance here. But again, we're using the perimeter not as a place to get long, but a place to target on a short bias. This is what I talked about on Wednesday. You're more than welcome to watch that video again on my YouTube channel and see what the reasoning behind that was. So yesterday, we pop. Look at how strongly we pop back up on this day. And this is part of today's narrative, actually, what happened on Wednesday. It pops up pretty strong right through the mid VWAP, RTH VWAP, and RTH mid, and full session mid right there. And it pops up and it closes relatively strong. What happens after the close? After the close, we get this bar here. These are 30-minute bars, right? These are basically TPOs. So look at that bar. What is that shape? That's what's known as a hammer. It is not at the bottom of a swing exactly, but this retested the 69.50 and came right back up. And in the overnight session, held that low throughout. So my bias yesterday was long with the LIS in here for yesterday. So this was the LIS right there, okay, with a secondary perimeter for buyers, protection. This is the protection zone for buyers right in here. And what it did is it continued to run. It opened, bopped around a little bit, tested almost to the prior week's high, comes right back into this LIS zone. We have some pretty good collisions. You see those collisions right there. Good volume. So we see a response from buyers at that level into the close. So we held the close into that LIS almost perfectly. And then it squeezes back up, and now we have a new LIS for the overnight session right up here, this red zone. And again, we find ourselves basically, so what is the overnight profile? The overnight profile looks something like this, with the point of control and the overnight profile right up here, right in the LIS, right into last week's settlement. So we are just, holding up any interest or any push into the 7,000 level, and we keep coming off. And so, we went as high as 36.25 and we came off. We pushed to 7,000. We keep coming off. And so this morning, we're in here. We're above settlement. So the overnight inventory, let's look at that inventory. Where are you? Where are you? Inventory. The overnight inventory is 99% long this morning. because 99% of the volume occurred above yesterday's close. You can see the settlement is below us. You can see that we're opening inside of the prior day's range using our market stats report. We know that the historical probability of touching the settlement price is around 73, 74% for this product. And so there's a downward skew today. So what are our scenarios? What's going on here? You know what? I'm not going to put myself back on the screen. I want you to have the full screen. There's no reason you should be looking at me. Pay attention to the markets. So most likely the buy card is off the table today. The expectation as we establish one-time framing up after yesterday. So if today holds above yesterday's low, we've established one-time framing up. And what happens if we establish one-time framing up today? So if we don't take out today's low, and we come back on Tuesday, remember Monday's a holiday, we come back on Tuesday, then this new all-time high, the 70.36, is vulnerable in that situation. So we have to keep that in mind. But overall, the expectation is responsive buying, and then I'm looking for this thing to give it up to settlement, gives us the overnight stat, gives us the settlement stat, and then retest this acceptance area and the location where buyers came in, and we're going to check we're very likely to check to see what's going on there, and we'll likely flatten out into the weekend, right? It's not likely that folks will commit big time into new all-time high prices or to sell off into this weekend. So most likely, and you see this in the RN/R vol this morning, you're seeing lack of participation, and that's likely to continue, and I'm expecting the market to just trap those who are looking directionally. Secondary scenario, we have the selling scenario coming in. We take the overnight low, the prior settlement. I'm looking for an impulse, and then the impulse needs to have a weak pullback for a long into the overnight VPOC, which also has its own stat, given the current configuration, 76% historical probability of it tagging this this overnight point of control in this configuration, and then we're looking for it to make another run at that 1717 and then rest up. In either case, I'm really expecting this market to close inside of this double distribution that we left behind yesterday. It just shows that there was quite a bit of participation from both sides, and both sides are somewhat exhausted this morning, okay? This is very optimistic, to be honest with you. Like the ranges I'm drawing on here, I'm really not looking for that for the session, but you know, if it starts to move and folks start to panic, remember it's a 3-day weekend. We're likely to see a trap today. It remains to be seen. So I'm going to be pretty cautious this morning. So, you know, I talked about this on Wednesday. The Iran news, brought us off. Actually, I didn't talk about this. Yeah, did I talk about this on Wednesday? No, I did not. This was, I think I posted a chart in Convergent for this. Notice the big drop. We already know that crude oil has $3 to $4 in war premium with the Iran news built into it, and then it looks like the de-escalation is happening, and so we drop $3 like in an hour. But look at what it did here. It came right back almost to the SOC in that session, in that overnight session. This news came in at around 2 p.m. Chicago time. I'm in Chicago, and then it just popped back up. But then it left this excess high or selling tail, and then from there it was basically, let's go and retest this buying tail. The selling tail failed. The buyers failed to hold. The buying tail became a selling tail, and then so the buying tail that was established on the news gets retested, and then yesterday, look at yesterday. Wow, just very poor, completely sideways. If I zoom in here a little bit, you'll see that we traded this zone quite a bit before we moved up, and then we came right back here. And so what we see here is crude is having what looks to me like a dead man bounce, not like a new rally. This does not look like a new rally. However, the LIS is below us in crude, and so the tilt is to the buy side, right? So it's tilting to the buy side, and what it's done is it's created a multi-distribution, almost a P-shaped profile indicating short squeeze, but it's run into these collisions into the overnight session, back into that, we're stuck in this news range. And as long as we stay stuck in the news range, we're likely to just drift. Not seeing much here, but coming into it, you could see the key LIS that I've marked is below, and so the expectation is any squeeze to the downside that gets retested, I'm going to look for a long, to look for that overnight high. The prior range is below us, so settlement is the probability of touching settlement today is lower because we're opening in a gap. We're not opening in range. That statistic, that 75-ish% historical probability is associated with us opening in range, and we're not. So the expectation is this is likely to kind of fill in to the upside, and it's trying to bounce, almost like late comers to the party looking to get into crude here. The alternative for crude, because inventory is mostly long, is we retest that area that we found collisions in. We have an impulse down, consolidate back at the open, and we give up the VWAP and mid, and we move into the LIS for that settlement back into the range, but I'm not expecting it to run beyond yesterday's range. I'm expecting it to get trapped in yesterday's range. So it's kind of stuck above right here, right? And stuck below right in here. So this is crude for you today. I'm going to move on. I was going to cover NQ today, but I'll pass on that. I know you guys asked for silver. It's just, silver's moving. Silver's really acting like a GameStop or something. It's just insane. But, there's a lot going on across the commodity space. And I could spend, an hour and a half here talking about all these products. They're all very interesting, but let's keep the video short. Let's focus today on managing risk and coming into the weekend without burning a massive hole in our pockets. That's really, really important as traders. We walk away for the weekend having known that we followed our process. Whether we made money or not is not relevant. Believe it or not, to any professional trader, making money today or on this next trade or on the last trade is not all that relevant. What's relevant is, did I follow my plan or did I go off the reservation? Because that's all you have as a trader is, did I follow my plan? Yes or no. That's it. That's it. And so it's not about, oh, I got to win. I got to make my money, or I got to hit my target for the day before I leave. That's a really poor and a very volatile way to run your business and to live as a trader. Okay. So we'll leave you with that. I know, I'm sorry. I just need to move on, get to other things. This is why I'm doing these trader bites a little bit earlier. Thank you all for who participated in telling us where you're located. Hopefully you can find a match and hook up with some traders that are nearby, get some meetups going, and make the community a little bit stronger. Catch you all this weekend. Monday is off. We'll be back on Tuesday, and I'll catch you then. Take care.